ROI is one of the most commonly used financial metrics for understanding how profitable an investment is. Whether it's a software tool, a machine, or a consulting service, ROI helps you measure how much return you get for every dollar you spend. La formula. ROI equals profit from investment minus investment cost. Divide investment cost times 100. Simple example. A software license is purchased for $10,000. This software increases employee productivity and saves $25,000 annually. ROI equals 25,000 minus 10,000 divide 10,000 times 100 equals 150%. This means the investment yields a return of 150% of its cost. In-depth approach. Factors affecting ROI include all cost components, purchase price, installation/integration costs, licence renouvelable fee, maintenance and support, employee training and change management, return calculations, time saved employee hours times wage rate, additional revenue from increased productivity, cost savings from reduced errors, revenue increase from increased sales, time horizon. The same ROI can have different meanings in different time frames. A 30% ROI over 3 years is approximately 9% annually. Annual ROI equals 1 plus total ROI or 1/year, 1 by 100. Comparative example. Investment A, $5,000 cost, $15,000 return ROI equals 200%. Investment B, $100,000 cost, $125,000 return ROI equals 25%. Although investment B generates more total profit, investment A is much more efficient in terms of return. Common mistakes to avoid. Failing to include all costs. Don't forget renewal fees, training, or setup costs. Ignoring the time frame. ROI over 1 year versus 5 years can significantly alter the value. Failing to measure indirect returns, such as employee motivation, brand image, or reduced risk. Excel sheet preparation with individual tabs. Software purchase, machinery investment, simulation and automation systems, consulting and services. Each tab should include the following data points. Investment type, estimated cost in USD, number of relevant users/employees, employee salary, monthly/annual, time saved, hour/week, monthly/annual company savings, additional revenue/cost reduction, total ROI automatically calculated. Result. ROI is not just a number, it is a decision-making compass. It helps you understand how efficiently your capital is working. By analyzing the return on every dollar invested, you can make smarter and safer investment decisions. Note, a detailed, automatic ROI calculator Excel file is provided separately for advanced use. You can request it by emailing howtosellsmarter@gmail.com. Stay tuned to our page and let us know if you have any questions.